The following program has been pre-recorded and is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hi, this is Esther Gulius, the tax lady from EG Tax, and this is our hour to talk taxes. And you know, this time of year, people think, oh, what a yawn it is. But I have to tell you, there's all kinds of stuff happening right now, and we want to give you the layout of what's happening in taxes. You know, right now, the Congress is looking at passing that infrastructure bill. In the infrastructure bill is a bunch of taxes and tax changes because that's how they're going to pay for it. So as soon as that passes, we'll let you know. But right now, those of you that haven't gotten your refunds, thousands and thousands of you, we want to address that as well. So, and I'm joined in studio here with Tiffany Fabian. Hey, Tiff.
Hey there, Esther. Happy day to you.
Happy day to you. And Christopher Fabian.
Hello, Esther.
I knew you were going to say that, Chris. You're so...
I'm just going to say hi one day and see who catches it.
Okay, so let's talk about... All right, let's first talk about letters. People are getting letters. I just had a lady that called this morning, and she said, okay, so the state of New York wanted my W-2s, so I sent them the W-2s. Now they said they want proof of the 1099s that I got. And she said, why are they doing this? And I said, well, then it gives them another 30 days to hold on to your money, right?
So definitely and if it's only 30 days, she's lucky because normally it's 90 days to 120. So
here's the thing. If you're getting a letter that says from the state of New York that we want to verify your wages, your wage statement, you got to send it in. If you ignore it, then they're not going to process a return. Right. So you got to make sure that you send it in.
Normally,
and why do they do that?
I've called the New York State, and they said that they're doing it to protect your identity and verify your identity. Cough, 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 cough.
Okay.
But normally, just going back to what you said about the caller, they do say in that letter, we want all your withholdings. So she probably just read W-2, sent the W-2s, and then she had withholdings.
You mean like for 1099 hours.
Right.
Yeah.
Right. Even unemployment. So
right.
So it could have been many different things.
But wouldn't the state of New York have issued?
Well, that's what.
Wouldn't they have done the withholding? And gosh, then they. Oh well.
I remember.
Anyway, okay. But anyway, so there's thousands of people. So if you're getting letters and you don't know what to do with it, and I know you're getting ticked off, and I don't blame you. I mean, I would be really angry if I haven't gotten all my money, and this is the middle of July. But we are trying very hard at EG Tax to help you, and so we want to help you. If you're getting those letters, don't ignore them.
I've noticed a pattern around right now because I've talked to so many people. There's two reasons you're not usually getting your federal return right now, and that's because, A, you either put on line 30, page 2 of your 1040 that you didn't get all your economic stimulus money because that shoves it off to another department at the IRS, and that department is inundated. And number 2, B, is another reason is if you got health insurance through the marketplace, that's another delay. So because
that penalty they would have assessed you when you did the form, they have waived that. And so if initially you had a penalty for getting over subsidized health insurance, they then said that, oh, we're not going to charge you that. So then that has to go to another department for processing as well.
Now, I've talked to several people and they're like,
and then the other thing would be the $10,200.
Right.
The unemployment.
Yep. And so I've talked to many people and they're like, well, my refund was shorted the stimulus. And I know I didn't get the stimulus, or people who still haven't gotten their return, they should fill out a form 3911.
All right, and so what we're going to do is that form 3911, which means that let's say you were supposed to get a $3,000 refund and they say we're giving you $3,500 because you really did get the $500 that you say you didn't. And there is a form to fill out, and you got to fill out the form. The IRS thinks in form numbers. So if you don't do the form, You can write them a letter, you can call them and yell at them on the phone, but you got to do the form, and the form is going to be on our website,
Yes,
right?
ma'am.
And the form number is
3911, and it's missing refund, also missing stimulus, missing form.
Now, do you think that you would send it in certified mail, non-return receipt requested?
Yeah, I think that's a really good idea.
Anything
idea.
Anything to draw attention to
Absolutely.
your situation.
Or if you can fax it, I would fax it because, as we all know, they're behind in answering mail too. So it's if you could fax it, I would say fax it.
Okay, because then you have proof that you
did it.
that
Yeah.
they received
There's
it.
instructions for the form.
All right, so
and
that
I'll
would
let you know
be letters that you're getting, people who have refunds that are delayed, whether it's due to the $10,200 that you claimed originally and you're going to get a refund back. If you had said that you didn't get all your stimulus money and they say you did, or if you had subsidy that you were supposed to pay back and then they said it wasn't going to be taxable, they're holding up your refunds for those three major issues. Is there any other problem
Major
that you see
letters?
that people are getting?
Well, I think we glossed over it really quickly, and I think, Esther, we should go back to it because you brought up the unemployment, the $10,200, and then also the health insurance money too, if you had to pay that back. So the unemployment money, the $10,200 or $20,400 that you were forgiven of unemployment, they're starting to roll out those checks.
So then, so they're just starting to issue those checks. But in regards to other letters right now, those are the letters.
Mostly what I see
We
at the
adjusted
office
your
is
refund.
people are just calling saying, "Where's my refund?"
Yep.
And it's very frustrating because we would love to help you. When we call, what do? They hang up on us.
Right.
They don't just say, "Oh, you're EG Tax," they hang up. I mean, they just basically say,
We're too busy."
Yeah.
Right. And what's interesting is because we've learned you have to call and then you call back, then you call back, then you call back. Like on the sixth time, you'll get through and it will say your wait time is 15 to 30 minutes. Mm-hmm. Normally, like in years past, we'll hear 30 to 60 or over 60 minutes. So you can tell with their employees still, with IRS's employees still working from home, I think their phone systems can't handle the calls coming in and allocating it to the people, forwarding it to people at home. So I think it's a out-of-date phone system that they have where they can't handle the calls. So,
right. And another thing you can do, you can call Schumer and Gillibrand in Washington and say, because let's face it, this is a management issue. Mm-hmm. Because when you don't have enough people, that's a management issue. Maybe if they stop paying everybody money to stay home, maybe some of the people would come back to work. But I'm not saying anything. But all these things are a problem. But here's the thing from us at EG Tax. We want to help you.
Right.
So if you're in the weeds with some kind of a letter or you haven't gotten the money, we will certainly try to help you as much as we can. But at this point in time, I think it's really worth somebody's while to give a call to your elected officials and say, come on.
Can you
And
give some money to the IRS to update?
There's even 2019s that haven't been processed yet.
Mm-hmm.
So, and if they shorted your refund, the ball is in your court. You have to then lob that ball back by doing the 3911, saying, no, I have a shorted refund. Or maybe you moved.
Right.
And they know they sent you the money, but you moved, so it didn't get forwarded.
Right,
or
good
maybe
point.
it was in the wrong bank account. All of those things are very, very important. And mommies and daddies with kids that are getting this advanced refund, if you haven't gotten that money and it went into the wrong bank account, you got to go in to the IRS website and correct your banking information because the refund's going to keep getting misallocated. So we're going to take a short break. I'm Esther Gullius, the tax lady from EG Tax. See you in a minute. Okay, I'm Esther Gullius, the tax lady from EG Tax. Normally we'll take phone calls. Today we're going to just deal with some issues because there's so many major changes going on, and we want to keep you abreast. So that first segment, we talked about what happens if you haven't gotten your refunds. all I can tell you is we're your advocate. We will do everything we possibly can.
Yeah.
Okay.
Yeah.
But why don't we deal with some issues here that
I
yeah,
wanted
Chris.
to say,
Yeah.
if you're somebody out there that likes how we think and you think, wow, I think like them too, and our tax school's starting soon.
Oh, that's true.
Our tax school starting in September. We have a session starting in September, a session starting in October. So if you want to learn taxes, come take our free tax course. You can give us a call at the office at 632-7886 or go to our website at egtax.com and register. We'd love to have you on board. We love helping.
Well, first of all, it helps you with your finances because taxes it was
Go hand
interesting.
in
I was with
hand.
a client yesterday, and he wants to buy a condo, so he's a fairly well-to-do person, and he was going to take $200,000 out of his IRA to buy the condo. So I said, well, if you do that. I said, you should do a mortgage. And he said, no, I don't want a mortgage. And I said, why? And he said, because I don't want to be in debt. And I said, well, if you didn't take the money out of your IRA and you have a mortgage, it's the same. You haven't gotten into any more debt. But here's the reality. If you take $200,000 out of your IRA, it's going to cost you $80,000 in taxes. Looking at the current interest rate, that like 2%, it would take him 20 years of a mortgage to equal what he would pay the first year if he took that $200,000 out. And his boys were there with him, and his boy said, "See, Dad, it was worth it. We just talked to Esther."
Have Auntie Esther, see?
So because when you factor taxes in, it changes the whole dynamic.
Yep.
And they're by the way raising taxes. That makes it even more dynamic. Okay, so we're going to deal with some other.
We got
issues
some
here.
questions. This is Dan from Williamsville. EG Tax. My mother put her home in my name. I'm talking about kids and parents, right? She is 80 years old and still living in the family home. She is in very good health. Since the housing market is so strong, what if I sell her house and move her into a senior apartment? How does this affect her taxes? Again, Dan
Right now,
in
there's
Williamsville.
a perfect example how parents and kids say, "Oh, I'm going to put the biggest asset I got in your name, and that'll really help you out."
Crunch.
Well, okay. Well, first of all, if she sells the house, because she's lived in there 2 of the last 5 years, if she had the house in her name and she sells the house, then the first $250,000. I'm assuming Dad is no longer with us. The first $250,000 again would be tax free, right?
Right.
But if he sells the house because she put it in his name,
That's a gift.
right? That means his basis goes back to what Mom and Dad pay for the house, and there might have been a stepped-up basis if Dad had passed away. But he's going to definitely pay taxes on it. So what would you say that he should do?
They should put the house back into Mom's name.
Well, first of all, it all depends on how bad of shape Mom is. I hate to say that. If Mom's in good health.
He said Mom's in good shape.
health.
Okay.
Good health.
Well, as long as Mom's in good health, put the house back in Mom's name.
Okay, but here's the 5-year look back that they have.
Exactly,
Everything has to be factored in. So assuming Mom's in good health and he doesn't think that she's going to go into a nursing home, and he doesn't want her to be paid she doesn't want to pay for the nursing home using Medicaid, right? Then the 5-year look back wouldn't be a problem. And if she sells the house, it'd be completely tax-free. So the first $250,000 would be tax-free. But let's say he goes back, and let's say there's a gain of $200,000 on the house. He might pay $40,000 in taxes if he sells it. So that's a lot of money. So what he could do is sell it, and then as soon as she sells it and it's tax-free, then can she give him a gift?
She can give.
And if she gives him a gift, then he's got the money, and then the counting starts right there.
Right. The 5 years starts all over again.
So it'd be like a 3-step process, but it's one heck of a good way to kind of skin a cat.
Right.
Very smart.
Right. I would say, Dan, give us a call so we can run the numbers, ask you more questions
Write out
to
the
see.
steps.
Yeah,
Right.
to figure out,
Right.
Right. And then who knows? I mean, she could be 80 and have a long-term care policy, right?
Right.
So her expenses are going to be paid for by the long-term care
Right.
policy.
Or Dad died. She moved to a smaller house. Maybe we'll say 6 years ago. So maybe
They have
there
a high
isn't.
basis.
Yeah. There may not be much of a gain.
Right.
So that's what we got to look at the
Of course,
whole
I
picture.
will tell you
not
the housing market like crazy. Even if if it was 2 years ago they bought it. If the housing market went crazy. But okay, but the bottom line, Dan, is we'll give you some options and run the numbers for you.
Hey, and then I meant to say, when you go to our website, don't forget that we have our podcasts that you can listen to on our website.
We've
which
been
is
doing
very
those
exciting.
podcasts, and they're fun.
They're lots of fun, lots of good information. When we're talking about this stuff, it just makes me think of those podcasts. So go to our site and check them out, and you can be the smartest person at the party, right?
Right.
Lois from Hamburg says, Tax Lady, I was on unemployment all of 2021 thus far. I have 2 kids. They are 15 and 10. If my unemployment is $30,000 in 2021 and I don't work, how much will I owe in taxes? By the way, I am divorced as of 2018.
Okay, so she's got 2 kids that are over the age of 6. Why is that important, that 6-year-old thing?
Because then she gets a
Child tax credit.
child tax credit of $3,000 per child,
is
Rather than
6,000.
$3,600.
rather than the 2,000 old child tax credit of
That's
$2,000,
true.
which she wouldn't have qualified for because she doesn't pay into Social
But
Security.
now they're doing
All
the
right,
advance.
so now here's the thing. If she's got $35,000 in an IRA and 2 kids, and she's head of the household, right, then she's not going to really pay taxes.
Right, 30,000 less
In unemployment.
18. She'd have 12,000 in taxable income, we'll say, which would give her 1,200. Her child tax credit, the new child tax credit,
Is 6.
But she's only going to get 3 because I bet you she's getting the advance, so she's going to get half of it. In
Well, it all
advance.
depends if she's getting the advance.
right. So,
So
but
she's not going to owe any taxes at all.
right,
But here's what I would say to, who is this, Norma?
Lois.
Lois.
Oh, that's right. She said 30,000.
Right,
Okay.
of unemployment.
Of unemployment. So what I'd suggest you do, Lois, you want to make sure you get some wages. Why does she want wages?
So she can qualify for the earned income
Right.
credit.
So they want to give you more money.
right.
So the kids saving you 6,000 because your income is lower on the lower income end. Once you have wages, they want to give you an earned income credit. So
Correct.
go get a part-time job at least.
Yep, for the fourth
So
quarter,
then not
Christmas
only will you
time.
not owe any taxes, plus you're going to get your $6,000
And
credit,
everybody's
And the
hiring.
kids-
and then the earned income credit.
and the kids are back in school.
Right.
So get a job from 9 to 2 every day.
Right. And so she might get an extra $2,000 from an earned income
And
credit.
every place I go, they have work shortage, and so
just
everybody's
because
hiring.
she's got $30,000 and is not going to pay any taxes, right?
Correct.
Because even though
Had a
she's getting a
household.
credit, you can get a bigger credit if you
Yep.
go to work, and
Yep.
you still won't pay taxes.
Absolutely. It's very, very good
And how
point.
much does she withhold if she gets
Zero.
Right. Don't have withholding because you have refunds.
Well, maybe
coming.
on New York State.
Yeah, that's
do
true.
withholding.
Well, she'll get an earned income credit. on
Right,
New York,
but you
too.
still gotta look at with the
that's true.
unemployment
She's not going to get the
and-
big. She's not going to get the big child tax
Yep.
credit.
You have a
This-
question, Chris?
Yep, this is from Lou. This is a really recent email. My house just got flooded with the torrential rain and hail. My finished basement had over a foot of water, looking around 50,000 in damages. Is there any way I can recoup any of this on my taxes? I know it's a long shot, but anything would help.
Well, I mean, it's not a long shot.
Right. You can only deduct it on the state.
But if they had declared it a
National
federal disaster area, right, then he'd be able to take it on the federal return.
Right.
Right. But they didn't.
Right.
Right.
So he's got it. He's going to have a casualty loss, assuming that there isn't any insurance to cover this on the New York State.
Right. And that's what you got to first go through your insurance company.
Yep.
You can't just take the loss on your tax. You got to go through your insurance company. Then whatever the insurance company doesn't reimburse you for is what qualifies for the casualty.
Right.
So, but then you also have the 10%
Floor.
floor of your income.
And
so
$100.
right, and the $100. So if you're making 100,000, that cuts off 10,000. So now you're down to 40,000 less the 100. So
Right, and multiplied by the tax
right,
bracket on
it
the
will
state.
help a little.
Right, but it isn't like they're going to give you a whole windfall.
Right, but that was just devastating with what happened to Niagara County. I think there's something people should go again to their Congress people and say,
This is a national.
this was a
Well,
huge
actually,
disaster.
I mean, let's face it. this being a Democrat stronghold in New York State, they should have declared it a federal disaster area. If they did, then, and who knows, maybe they didn't. I didn't know.
Right.
Then they'd be able to take it on the federal.
Right.
Yep. And then don't forget, if you are itemizing, don't forget to also put your property taxes and your mortgage interest and your job expenses and any medical deductions you have.
Charity.
Yeah,
charity.
because that means you're itemizing, and if you don't itemize, you won't be able to take this deduction.
Right. Well, so the only place you can itemize right now, if this is not federally declared disaster, is New York State, right? So if he doesn't have any insurance, he's going to get a casualty loss on New York State, which he has to reduce by 10% of his adjusted gross income. He'll get nothing on the federal. But call your state, your federal official, and say, by the way, did Biden say this was a federally declared disaster area because of that flooding? You never know. He might have.
Yep.
You know,
Yep.
I don't know everything Mr. Biden does all day, right? I don't think he knows either. So,
I'm
all
going to
right.
sneak in Alicia before the break.
Well, no,
46.
actually, what I think I'm going to do, because I got a break for news, but I'm Esther Golias, the tax lady from EG Tax. Our phone number here in studio, no, so this week we're not taking calls, but next week we will take calls. Today we're just kind of chewing up everything because we're on the precipice of them changing the tax law, and we wanted to make sure that we cover some of these things. Next week we'll be back in studio taking your live phone calls, but we're going to break right now for news. I'm Esther Golias, the tax lady from EG Tax. See you on the other side. Hi, I'm Esther Golias, the tax lady from EG Tax, and we're here helping you with to sort through some of these myriad of problems. And I will tell you, I can't. Have you ever seen taxes be this complicated?
In my
I mean,
35 years,
like
no.
the additional child tax credit that they're coming up with. So it's like children under 6, 3,600, kids over 6 up to 18 is 3,000. Unless your income exceeds 150,000, then it drops back down to 2,000. I mean, it's like nuts.
And you know what? I'm going to beg and plead right now. If you're receiving the additional child tax credit, keep track of it. Because come next year, we've seen it now with the stimulus. Look how long people are waiting for their refunds
Right.
because they put the wrong dollar amount down. Please keep track.
Also, if you're to build on that, if you haven't gotten the advance and you haven't opted out, double check, go into their website and double check and find out if they have the wrong banking information. Because let's say that they've been sending you $300 a month, and for 6 months it's $1,800, and it's been going into the wrong bank account, it's been rejected. And you go to do your tax return and you think you're going to get $3,600, they think they paid you $1,800. Just like Chris is saying, it could hold up your refund while they're reconciling that.
Yep.
So make sure you go in to the IRS website if you have those kids that are getting the advance and you want the advance, to make sure that the banking information is correct. Or if they're sending you a check, don't move without giving them your new address.
Or if you've had a new baby, or if you haven't filed in a few years, you got to do the same
Absolutely.
thing.
Okay, what else we got here?
I've got a question. This is Alicia, EG Tax. I think there was a mistake on my return. Looking it over, my preparer marked me as single, but I am actually a widow. Won't that change my answer? Also, my refund was short $600. Can you help? This sounds like somebody who just called the office. And so the truth is, you can only use that widow status, qualifying widower, if you have dependent children for 2 years after the passing of your spouse. So if you don't have any children and you're single,
Actually, they're dependent children on top of everything. It's
yes,
not just
your filing
children.
status is
Yeah.
single. So there probably was not a mistake. You have to use the single filing status. And did you want to say
And
something
now,
about
if her
that?
refund's short, that's another thing where maybe she want to use that form,
Form
3911.
3911.
Right. And that's with looking at it, just thinking, if she's missing 600, that sounds like a stimulus.
Stimulus.
That means there was only one person on the return, which probably means she doesn't have
Right,
dependent
children.
children on it. So the single would be the correct filing status. But then the 600 is the stimulus money. So if you are sure you didn't get it, and the IRS says, no, you did get it, that's where you have to use the form 3911. Or if you can call the IRS and we can get in touch with them, ha, 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 they could say, oh, well, it was issued a check, and then they could trace the check to see if it was ever cashed. And if not, they'll reissue. Or
And that's why direct deposits are so nice. People can take a check out of your mailbox, but when there's proof that something was deposited into your checking account, sometimes we forget. Last year when I was doing tax returns, I would make my clients go back into their bank account. We'd go into their bank account and we'd say, see, you did get that money.
Right. I mean,
some people forget.
I've had people call and say, where's my refund? And I'll go to the IRS website, I'll look it up, and I'll say, oh, it was deposited on April 7th. And they're like, what? Oh, and they'll go back. It was. I just didn't even realize
And some
it.
people have multiple bank accounts.
Right.
And they look in bank account A, but there's B and C they got to look at.
Right. But I got to say, most people nowadays don't reconcile their bank accounts. It's I don't want to say funny, but it's very interesting. You have like the 80-year-olds come in and they're like, I don't know. I haven't gotten my bank statement yet, so I don't know what deposits came in yet, because they're sitting there with pen and paper figuring everything out when they reconciling it, where you get somebody who's 25 and they're like, what do you mean reconcile my bank account?
Right.
So.
But there are so many people that don't realize they got it.
Right, that's what
I mean, and during tax season, when we were doing the returns, people were like, I don't know. And then they would try to look on their phone. And I can tell you next tax season, when we're doing the child tax credit and reconciling that's going to be a chore as well.
It sure is. Okay. What else we got?
I've got Mike from Blaisdell. My daughter is 19. She goes to college. And in 2020, she had her friend do her return. And she filed by herself. She got all of her back stimulus money. I'm wondering if we should have had her do this, or should we have claimed her for 2020? I'm so confused. My wife and I make about $95,500 a year, and we have one other daughter who is 14. Any advice? Greatly appreciated. Mike from Blaisdell. So that was really confusing this year. There were a lot of kids who got unemployment, and there were a lot of kids who actually, for the first time, I can't believe I'm saying this, they should have filed their own tax return.
Because of all the stimulus.
But the
stimulus is now gone. So 2021 will be different than 2020.
Right. Exactly. But really, you got to run the numbers, because if she had college and she would have qualified for the AOTC, I mean, Chris and Esther, correct me if you're wrong, the only way to know is to really run the numbers and see, right?
Absolutely. Well, like, for instance, let's say that she had a job where she made $1,000.
Right.
Well, she's going to get nothing for the AOTC, right? But
Except
the
for the
parents,
refundable.
But if she had like $10,000 in education, she would have gotten between the state and federal about $2,900 for the parents, right? And so you got to look at the first stimulus was how much?
12.
And the second stimulus?
600.
And the third?
14.
So when you add that all up?
That's 3,200.
All right, so they would have made out by 2,900 plus 500.
Yeah.
So they would have made out by 34. She would have made out by 32.
Right.
And so I guess would be a $200 benefit
But
to the parents claiming.
If she only made $1,000, did she collect $18,000 in unemployment?
Right.
Which
That's another
most
thing.
kids
But I mean,
have
I'm
done
just
this
saying,
year.
if
Oh, I
you
know,
were
but
a
I'm just
low-income
saying.
person, but then it all gets built upon because so many kids got unemployment last year.
Right.
And it's absolutely correct. You have to
And then
do
the
it you have to
unemployment-
do it longhand, whichever.
And the unemployment triggered kiddie tax
Yep.
if the parents claim them.
Right.
So here the child would have had to pay maybe 22% on the unemployment if the parents claimed her. So then it would have been totally beneficial.
For the parents not to claim her.
Right.
Right.
And then this year they can go back and claim their daughter again.
In
They-
2021.
in 2021,
People
because
were
each
And the
year-
whole thing is, if you did it, like I'm just amending a return right now, where the parents didn't claim the parents let the daughter claim, no, the parents claimed the daughter, but it would have been better off and the parents claimed the daughter and didn't do the AOTC. So I'm going to get them back, and they don't pay any taxes. I'm going to get them back $1,000. But they also didn't have the daughter claim herself so that she could have gotten all the stimulus. So it was like they shot themselves in the foot both ways. So we're going to look at it and see.
And
but
so
just
you
because
can
you
amend.
file doing it incorrectly doesn't mean you can't fix it,
Right.
because you can amend the tax return.
Most definitely.
Right.
You can currently amend your 19 and your 18 return. So there's no cost
And
to have
20.
us look at it. I know I'm looking at a few returns right now, and it was somebody who actually has a lot of job expenses. And the person who did the return didn't take the job expenses as itemized deduction on the state, and it'll save them about $300 or $400. And $300 or $400 is worth it if you've got all your documents in order.
Right.
I've
And that's the caveat on the state.
Yes.
If you got all your documents in order.
right.
Okay, go on.
You want to do it, or should I, Chris?
I got it. I've heard you say that daycare providers need to report their income due to the change in taxes in 2021. I take care of 3 kids, and my fees are approximately $900 a week. I have never claimed this income. What does it do to my taxes? How much money are we talking about in taxes? Help!
Okay, so just because you've been cheating in the past doesn't mean you should continue to cheat. Now, here's the weird thing and benefit to people that are paying for daycare. The daycare credit this year can be a lot of money.
Right.
Yeah.
It's
Up to
50% of the first 8,000, right?
Yep.
And if you have for one child, and it's 50% of the next 8,000. So you could get a daycare credit of $8,000 if you're
That's
paying for daycare.
huge.
So if your daycare provider in the past said, "Oh, I don't really want to claim it," and it was only going to save you $1,200, you would have thought, I like Laura enough that I'm not going to claim it.
Right,
But now with the credit being $8,000, for instance, well, that's a $7,800 swing. You know.
Right. And here's Tracy, who takes care of these kids, making $900 a week. That's $47,000 a year she's not reporting as income.
Right, that's major fraud.
That's major fraud.
And
but
then, not to mention, go on.
But then let's look at Tracy. Here we go. Are you watching these kids in your house?
Right.
When do they arrive? When do they leave? How much money are you spending on food, diapers, cleaning products, your cell phone, toys, videos, games?
Right. The
all
electricity in your home.
Right.
Your insurance, repairs to your home, classes you take, additional insurance.
Right. So here you could take your 46.8. We'll say you comes up with 26,000. So you bring your income down to 21,000. Okay, it's still, but first of all, that's adding to your Social Security. So when you'll get Social Security when you become, if it's still there, but 21,000 times 15%, that's 3,000 in self-employment tax, and we'll say another 3,000 in taxes. So that's $6,000 to make 50,000. That's not bad.
Well, and not to mention how, let's say Tracy's got children.
Yep.
Now she's got an earned income credit.
Yep.
So the federal government is actually going to pay for her Social Security.
Yep.
For all intents and purposes.
Yeah.
Because I've seen people that don't want to claim the income, and I say, but you have kids, and if you claim the income, not that I wouldn't claim the income, but you'll get an earned income credit. You're going to get a child tax credit. Mm-hmm. So you're going to end up by claiming the money, make more money than if you don't claim it.
That's right.
And then your daycare people also get this gigantic credit on their return.
So it just takes a change in mindset and understanding. It's very complicated. And so just give us a call and we'll break it down.
Absolutely.
And I got to tell you, there's so many times that a client will want to do this. I say, let me talk to your daycare provider. And it just really makes a difference if an outside
source. And many times the daycare
source.
provider is grandma and grandpa. Mm-hmm. And I say to them, you're not charging them very much. You're charging them $5,000 a year. After I take all your expenses, there is no tax liability. So mom and dad are going to make $2,500, and you're not paying anything. It's a win-win situation.
Yeah,
right?
It is.
All right. I'm Esther Gullius, the tax lady from EG Tax. If we have prime the well of your mind and there's things that we're talking about that pertain to you, give us a call during the week at 632-7886 or go to our website at egtax.com because we really want to help you. I don't know if you can hear it, but we really care. We're going to take a short break. We'll be back on the other side. Hi, I'm Esther Gullius, the tax lady with Tiffany Fabian, Christopher Fabian. We're getting ready to look at a major tax change, I think, and as soon as it happens, we're going to let you know. But we're addressing a lot of the issues that are pertinent to the way tax law is written right now.
Yep. I've got Kurt from Lancaster. with a question. It says, EG Tax. Our family was thinking of putting the assets from our parents' estate. They are still with us in an irrevocable trust. They have a business which will probably appraise at $10 million. Wow. And they wish to have all four of us inherit it equally. With their other assets, we're looking at another $3 million in other assets, making their estate $13 million. If they change the tax law, what can we do to reduce the burden so that the tax won't make us forced to sell the business?
And that's exactly what will happen, because they're talking about moving the estate exclusion from like 11.8 down to 3 million, 11,800,000 down to 3 million. And so a lot of people don't realize that what estate tax. So you've paid taxes all your life, and then upon your death, then they're going to tax you again. Mm-hmm. So let's just say that the estate is a taxable $8 million. They could pay $4 million between state and federal in taxes. God. So they might be forced to sell the business. But what they might want to do is put the business, have the parents gift the business to a trust right now. Mm-hmm. And if they gift it to the trust, and the trust, or some of the assets to the trust, and they take a distribution from the trust, then the trust, the beneficiary is who's going to pay taxes now, but that'll reduce the taxable estate later. But the important thing is you should really talk to a well-seasoned estate attorney so they can walk you through, especially if they're looking seriously at changing this estate exclusion, because otherwise you might have to sell the business.
Right,
to
right.
pay the
So
tax.
sad.
And you got to look though too at how much money is the net profit of the business to see what their tax. Is it a C corp? Is it a C corp? Is it an S corp? Is it an LLC? What type of business entity it is?
Right.
Because the amount of taxes that they're paying now could be different than the taxes that they pay through a trust, because the trust has
Absolutely.
higher,
But looking at a $4 million
right
estate tax, and then again, that's assuming that mom and dad would be passing away during this administration, and maybe the next administration is going to put it back again. So it really kind of is a crystal ball moment.
This is a joke.
Okay.
Call Dr. Kevorkian.
Oh my gosh. Thanks, Chris.
Now,
That's
how
not
long
very
has
good.
it been 11 million? How long has it been at that limit?
For Trump administration moved it to like 11.8.
Okay, and where was it before that?
6 million under
7,
Obama.
yeah, but then you could have passed it on, right? But the thing is, looking at this, if there's $3 million in liquid assets and the tax liability is $4 million, that would mean that they'd be shy $1 million. So they might have to take a loan against the business. But obviously, you should really talk to an estate attorney.
Yep.
I know we had Jeff Katz on the other day, and we bridged this topic with him, and his mind was just swimming. But he really didn't have lots of definitive information to.
Because nothing's written.
And it's
yet.
not written
Right.
in stone yet.
Yeah.
So I mean, it could be $5 million. If it's $5 million, then
So it's a horse of a different color.
they'll pay $3 million in estate taxes.
Right.
And then the other thing is, I was with a client the other day, and I said to them, "You don't happen to have life insurance, do you?" And they said, "Yeah, I have $400,000 in life insurance," which in this person's estate, that would have covered the estate taxes. So life insurance, term life insurance, is a great way because it's completely tax free when a person inherits it, if due to your death, and if you're using that to pay your estate taxes, that's something that you can do. So estate planning is nothing for the faint of heart.
Right. It isn't. It's always a very popular topic. I've got Norma from Buffalo. EG Tax. I must take money out of my IRA. This year I need to withdraw $35,000. When I do, how much should I have in taxes withheld? So there's a lot of information that goes into that. Is she married? How old is she? Why does she have to take it out? I mean,
Well, I'm assuming she's talking about an RMD.
Okay, then
that's
you
what-
could
that's
roll
what
it over to a
sounds like.
qualified charity. That would be cool. anyways, so that's
Well, that's
her
a lot of
RMD.
money. Most people don't give $35,000 to charity.
Right.
But whatever she does give to charity, if she were to do that charitable rollover, and it was from it's got to be from an IRA, not just from a 401k
Right.
or 403b. Whatever she gives to charity in a direct rollover won't be taxed.
Correct.
And it fulfills the RMD requirement. And this year, remember, everybody, if you're over the age of 72, you got to do your required minimum distribution, or the penalty's 50% of what you didn't take out.
Yep.
Exactly.
Yep. And that's the thing. I mean, you're right, Tiff. This doesn't say what her other income is. So, first of all, if she's 72, that means she's on Social Security. We're saying if it's just Social Security, based on 35,000, you're probably looking 85% of your Social Security is going to count as
Yeah,
income too.
right.
But I would think she would have other income if her minimum distribution is $35,000. I mean, she has to have other income, other assets that's producing income, because that's a lot of money to have as a withdrawal. So you definitely got to give us a call so we can run all the
Run
numbers.
the numbers for you. But the easy thing is, if you are somebody that's philanthropic and you want to roll over, you use some of that money to go to charity directly rather than writing out a check every week at church. Just pay the church a lump sum, and you're good for the year. And then you can use that to reduce your taxable RMD.
Right.
And then-
go ahead.
Oh, okay. And don't forget, if you are over the age of 70 and you're still working, it's pretty cool that you couldn't put money in an IRA beyond the age of 70 and a half.
Good point, Tiff.
They've now
You know,
opened up the
that's true.
window.
So
and
now,
you
no,
can keep
regardless
putting it
of
in.
your age, you can be over the age of 70 and still working, and you can still contribute to an IRA.
Right. And hopefully Norma's not adding the 2020 distribution with her 2021
good
to come
point,
up to her
Chris.
35,000,
Right.
because you don't have to take it out twice this year, because you didn't have to take it out last year.
Right. So if in 2020 you didn't do it because you didn't have to, you don't have to double dip this year. You just take what it would have been an RMD based upon the figures as of December 31st, 2020 for the 21.
Right.
Right. Yeah. So
there's so
he's
many
right.
people that
You
have
don't
been
take out
confused by
twice as
that.
much.
But I got,
yeah, go
sorry, I got to tell you, I had a consultation this week, and same thing. Oh, our minimum distribution is X amount of dollars, and I'm like, well, are you tithers? And they looked at me, what? Okay. Do you give a lot of money to charity? Well, no. Why are you asking? So I brought up the charitable distribution, and they're like, oh, well, we really don't need the money. Maybe that's something we'll look into, is giving extra money
to a charity.
to a charity instead of paying taxes.
Right.
So, I mean, it's something to look at.
That's true.
I just wanted to say, for everybody listening out there, don't forget, with the increase in minimum wage, the increase in wages, the bonuses, don't forget to sign up for your 401k. I mean, if you have this extra money, you won't even miss
Don't
putting,
spend it. Right.
Put the money
Set
in
it
a
aside.
you know, the 401ks, probably there's a 3 or 4% match. So sign up for your 401k. There's a retirement savers credit on a form 8880. And, you know, nowadays the days of pensions are really dying. You have to build your own, grow your own.
And now that, again, we're talking about people that are older, you can, like Tiffany says, you can put money into your 401k or your IRA if you're over the age of 70, where you couldn't before. But you also can get an earned income credit
Yep.
if you have wages. So that's a mind blower.
That's
Yep.
a mind blower. God, there's so
Okay.
many, like you
We
said,
got-
so many changes.
Yep.
We got Terry writes in, I just started a new job, and the new W-4 is very confusing. Yeah,
You think?
Yeah. Also, with the change in the child tax credit and the child care credit, how do I account for that on the W-4? I don't like the government holding on to my money. I will use it more efficiently than them. Also, is New York State changing anything like the federal?
Okay, so the W-4 is very confusing because the way they've rewritten it, you're actually like doing a tax return.
Yeah.
Right? So I think the easiest thing to do is to call us because we can run the numbers and say your real liability is going to be $1,000, and you've already paid in $2,000, and I wouldn't have anything else withheld if you don't want them to keep your money. And I will tell you, those of you that are waiting and waiting and waiting and waiting and waiting for your refund, it is a good thing to do to look at your W-4.
Yep.
I mean, you just had an attorney the other day that called and said
They were married.
We are very
Both-
smart.
The
We're
couple, both of them
attorneys.
were attorneys, and they said we can't figure
We can't
this
figure
out.
out the W-4.
Yeah, I mean, and the thing is too, looking at it, they give you only 15 lines saying if your income is between here and here, use this line. That's not a lot of leeway. I mean, that's too much leeway in between each
Right,
category.
because all those other taxable categories, right?
Right, because some of them were 40,000, so you could have been at the bottom level, and I'm just using it as an example. I make 150. Well, that's where that level starts, where the next level is 200,000. Why would I withhold at a $200,000 level when my income's only 150?
Right.
So you got to really look at it and be careful. And
But so the bottom line is we'll help you. Call us and we'll be very happy to help you. Oh, well, boy, our time disappeared. And there's all kinds
I
of
think
other
the
things.
bottom line is there's so many changes.
Oh, my gosh. And wait,
And stay
that's
tuned
what
to our
they
website.
did from the last change.
Right.
And when they do the new change, I think all bets are off, and we're going to have a lot of things. We're going to be looking at the loss of stepped-up basis for a lot of people, the loss of specialized taxes on Schedule Ds, lots of stuff coming up. So check out our website at egtax.com, and if you need us during the week, you're getting letters, you haven't filed, you got questions, give us a call at 632-7886. Until next week, I'm Esther Golias with Tiffany Fabian, Christopher Fabian. Hey, and thanks for listening. God bless you guys. Bye-bye.